Welcome back. As we expected, market opening flat here, up just about 1.5 points. Really, the investor community waiting on Janet Yellen, who's going to give her opening statement in about 20 minutes. We will bring you any headlines that comes out of that. I'm with Terry Duffy this morning, CME chairman and president. Terry, you mentioned earlier, is this going to get political? I mean, there's a lot of things that sort of are political, within business, and that is, Dodd-Frank, while it is approaching to protect investors, it's creating a lot of politicizing around the expense of it.
Yes. That was also the case with Sarbanes-Oxley.
That's right, Starbucks, yeah.
So there was a tremendous amount of expense that nobody anticipated coming down once Sarbanes-Oxley was fully implemented. I'm not saying Dodd-Frank is actually the same because it's much larger than Sarbanes-Oxley because of the costs that go to so many other participants and the new rules and everything else. But I do believe we will get past this, and we needed to have some changes. Obviously, Dodd-Frank went too far. But my history that shows me how Washington works, they swing the pendulum very far one way, and it kind of works its way back to the middle. I think that's what we're going to see over the next several years. I think that this government understands that financial services are one of the greatest assets the United States of America has, and we have to make sure that they can run efficiently. And you cannot run things efficiently when the costs are so burdensome that nobody can operate. So it doesn't make any sense for me from that standpoint. I do believe that the politicians will continually recognize this. They'll put in stricter rules, but the rules won't cost as much. And I think that's really where we're headed.
Well, we'll see about that. I mean, so far it's been an expense for every CEO I speak to, and they're expecting that the expenses are going to ramp up this year going into 2015. I want to get your take on high-frequency trading.
Yep.
Let me ask you about that, because so much revenue is coming from HFTs into CME, but you're also hearing complaints from some people, right, about high-frequency trading. Do they provide the liquidity? Do we need that liquidity? If we were to eliminate HFTs from the market, high-frequency trading, aren't you taking out an enormous part of the liquidity of the story?
Let's take a look at the New York Stock Exchange, say 1980. And if we said every trader on the floor of the New York Stock Exchange or every trader on the floor of the CME went away, and we said, okay, all the commercials come in and trade together, who's going to provide that liquidity for them? There's nobody there.
Right.
If we took everybody off the trading floors before we went on electronic. These guys, yes, high-frequency trading has got a perception issue right now that needs to be dealt with. And it's, from my standpoint, regulation of high-frequency trading is the most important thing. I want to show the world that, we are highly regulating this activity, and everybody's getting a fair shake. What the problem is, people think they're getting information before somebody else does, and they're benefiting from it. Technology is technology, Maria, and it's going to continue to advance, whether it's in medicine or whether it's in markets. So we are now in microwave technology trying to get rid of more latency time. So we're down to almost zero latency time for anybody now. And you co-locate the stuff, you make sure it's properly monitored, and that's what's truly important to the participant. But you need to have liquidity for people to do their risk transfer. Right. Or again, the spreads will widen dramatically and the consumer will pay that cost. So
I totally agree, because on the one hand, you want to make sure that one group of participants is not running ahead of another group of participants, but at the same time, you can't eliminate a whole pool of investor and liquidity if you eliminate HFTs.
Are there bad actors in HFT? Probably. Are there bad actors and traders 50 years ago? Probably. We make sure we weed these people out and keep the market you have to have credibility in the marketplace, Maria. If you don't have credibility, nobody's going to participate in it. So that's a big function that we do at CME, is to make sure it's credible and show the participants. We put on our website some of the tools we use to police high-frequency trading. Now, we don't put everything on there because we want to make sure that if somebody is doing some nefarious activity, we can obviously catch them. But this is something that I'm paying very close attention to, because you're right. The volumes on the equity markets are probably 60 to 70% HFT. In our world, they're probably 50%.
Yeah.
And that's no different, though, than what the old floor trader used to take on a daily basis. They took that much liquidity.
So CME recently came out with the wash trade advisory. Which is, when a trade cancels itself out, the HFT wash trade. I mean, do you believe that advisory is going to stop wash trading from HFTs, which operate in milliseconds?
Maria, these trades will always bump into each other to some extent, and it's accidental, and because of the way they're going, how fast they're going. You have multiple people trading in an office under one account for one particular big firm. They're going to bump into each other. That's deemed a wash trade. You can't do that. You can't trade with yourself. So, yes, we are putting new technology in to make sure that doesn't happen. So very comfortable with that.
Having you talk about this is so extraordinary for our viewers, really, because you are so steeped into so much of this. And, you know, we see the headlines sometimes, but hearing your opinion about this is really important. So thank you very much for weighing in.
Thank you, Maria. But I think what's important is here, I have a vested interest in this, but at the same time, I don't want activity being traded at CME that's not credible.
Of course.
So that's why I'm so passionate about this. And, you know, it's an education process. This has taken on a life of its own over the last 3 years, how much it's grown as far as electronic trading alone and with high frequency and algorithmic trading. So yes, we have to continue to police it and make sure we do the best possible job for the participants and for the end users.
Which is why you're doing it and you focused on it. All right, Terry, thanks for that. I want to tell you about Bank of America.